If gold goes to $3 trillion an ounce, you are not going to want to trade your gold for those $3 trillion an ounce unless it's to pay off your mortgage or some other fixed rate debt. You're not going to want to convert it unless it's to convert into income producing assets.
Gold and silver are two popular investments for those looking for assets that can be both a store of value and a hedge against inflation. These precious metals are well regarded and have a long history, but they offer different types of benefits and security, and investors should be aware of how they are likely to perform in various economic climates before deciding to invest in one of them. Whether you are looking to invest in gold or silver, you can do so in the way that best suits your needs. But you will want to understand the dynamics of each type of investment. In today's video, we will share, according to Lynette Zang, what types of gold and silver investors will make huge money. But before we get into the video, make sure you subscribe to our channel and press the bell icon to never miss an update.
In the marketplace where you saw the ETF, this SLV ETF, having to change its documents, its prospectus, to simply reflect the manipulated spot price because they could not get enough physical silver to fill the baskets, I think that is super telling.
The dollar and all fiat currencies are headed towards zero. And we're not too far off now. The only thing that holds us together is trust. And so the real safe haven asset is gold. So will it be short-lived? When they do this overnight revaluation, they are doing it against precious metals. You can see that in Venezuela, it went up the first time. And then it can get people to trust the new system, which will be the CBDC. Then they will have the ability to reduce it. But if you look at these currencies, these overnight revaluations occur on average 3 times. So it could be more, it could be less. And the key that you really expect to know when you've really done all you're going to do to revalue is the gold component of the currency, because then it stabilizes. If gold hits $3 trillion an ounce, you won't want to trade your gold for that $3 trillion an ounce unless you pay off your mortgage or some other fixed rate debt. You don't want to convert it unless it's convert it to income generating assets. So there are 2 parts to this. Number 1, most likely somewhere near the top in nominal terms based on these overnight revaluations. We're not going to wait for Wall Street to tell us. The government, the central banks, when they do this revaluation overnight, that's when we'll find out. But keep in mind that unless they actually introduce the gold component, even if they drop the price later, just know that it's not over yet. Coming back to strategy, you will want to be strategic about when converting precious metals into currencies. And because the direction they are heading is central bank digital currency, which is extremely dangerous. You will even want it when they go all that way because they will do it first and say it will save us, and after all, we will have no more inflation. That's how they're going to sell it to us. They really want you to think that money now has only 2 functions, and it's like a measuring tool and a bartering tool. Forget about any level of store of value. Forget about being paid fairly for your work, because that money would immediately go to a CBDC account that has negative rates. So you won't even be able to get paid. If you think you're getting $100, you're not. But here is the reality of the market. When you saw SLV ETF having to change its documents, its prospectus to only reflect the manipulated spot price because it couldn't get enough physical silver to fill the baskets. But we had the gold coins to collect both at the nominal level and at the very high level, breaking through a key resistance level. It's quite telling that demand exceeds supply. They can create as much paper gold and digital gold as they want. There are no limits. It's a real supply of demand. And the physical world tells us a very different story than the spot market. Everything has been turned into a Wall Street trading product. You can believe that there are lies where you can take a stand and say this is the true supply-demand market. We can see that really obviously in the physical market.
When they do that overnight revaluation, they do it against precious metals. So how high in terms of the fiat it will go is anybody's guess. You can see in Venezuela it went up that first time 3,500. And then if they get people to trust the new system, which I think is going to be CBDCs.
That's it for today. Let us know your views in the comment section below. And don't forget to like this video before leaving. Thanks for watching.